The next time you go to fill up your car, I want you to think of this trending. Are you really consuming less? The lost commodity decade might be in the rearview mirror, and the environmental landscape of the future has already changed dramatically. A conversation well worth your 10 minutes, only here on UBS Trending. Hi everyone, and welcome to UBS Trending. I'm your guest host, Siobhan Chapman, filling in for Anthony Pastore. Today we are joined by Al Chu from BNY Mellon to talk about what's trending in commodity prices. Let's get into what's most important. So Al, the last time you joined us, you talked about how we were in the early stages of the commodity bull market. Now it seems the fears of a recession have taken some wind out of the sector's sails. How should our audience consider commodity prices given the current context of the economic backdrop?
Hi, Siobhan. Thank you for having me. It's a great question because commodities have had a very weak start to the year, especially after two very strong years. But one of the tenets of investing is that you really have to separate the perception and the biases versus the actual underlying data. If we look at actual underlying data, demand is still very, very strong.
Right.
Commodities, while the prices have been weak, the underlying structure, the supply and demand remains very robust, right? Year over year, Europe, China, even in the US, demand is holding in very well. And supply, the same secular issues, right? If we look at oil, for example, in the 70s, it took about 1 barrel of oil to generate $1,000 of GDP. Yet, if you fast forward to 2019, 2020, that number has dropped way below half. It's 0.4 barrels. So the oil intensity in the GDP has gone lower and lower. So when we worry about economic recessions or volatility, the actual impact is actually not that high versus what the perception is.
So what do you make of that? What does that mean for investors?
Well, it's about identifying mispriced assets, right? Right now, because the oil market is climbing a wall of worry. Oh, if we go into recession, oil demand will fall negative, it'll impact supply and demand. Yet, if we actually look at the fundamentals, for example, during the Great Credit Crisis, probably financial Armageddon, total oil demand globally, when things were frozen over, you couldn't send shipments.
Right.
Total oil demand went down approximately from peak to trough around 1.6 million barrels a day of demand from peak to trough. And you fast forward to today, where it's not the financial crisis of the mid 2000s. And if you think about it, OPEC over the last month, what did they say? They said, "Hey, we're worried about recession. We will take off 1.1 million barrels of oil." So how does that work out? Economically, we're not in the credit crisis. Yet, during that period of time, we only took off 1.6 million barrels of demand. And right now, the supply effect is actually easily offset whatever weakness we will see.
So it seems like there is a disconnect between commodity prices and the fundamentals of supply and demand. How long do you think that this could last?
It's a great question, because if we actually look through the cycles, even in periods of financial contagion, if we look at the 1997, 98 Asian contagion,
Right.
Oil demand in Asia kept on going up. That's one of the misperceptions about the market, is that, demand must fluctuate greatly. Demand, through the test of time, increases. We drive more, we eat more, we consume more, we wear more, we build more, right? It's typically the supply that causes the fluctuations, right? It's the supply that ends the cycles. And if we look at it, what's causing an end to the cycle right now? Are we building more? Are we drilling, mining more? If we are in a recession, or are we going to go into a recession, name one management team that will say, "Hey, you know what? I am going to increase my capex. I'm actually going to go and build that mega project because, recessions will be a great time." If anything, the recession will actually exacerbate the supply situation. So that's what we're seeing right now. And typically, recessions can be measured in months and quarters, not years. So if we look at impact of historical recessions on the commodity cycle, it's very brief. And the minute economic activity picks back up again, the underlying commodity cycle still remains on trend.
So China's economy bounced back much faster than was expected. And China reopening is one of the tailwinds that you highlighted. What is the data telling us, and are the key drivers still intact?
Yeah, no, that's a great question because that's one of the biggest things that are unique to this cycle, right? Before, obviously supply is a big issue, but if you imagine China, this is the biggest commodity consumer in the world.
Right.
They have been in a 3-year lockdown. Now, at the end of last year, the government mandated a reopen. Now, this is a top-down economy, right? This is not a pure market economy. Now, the government
control a lot.
absolutely,
Yes.
they pretty much control
Rice,
every
corn,
single.
wheat, exactly.
Right, they control the demand, whatever they want.
Right.
So when I see that kind of dynamic, and people say, oh well, the reopen is over, it's done, and the question I really want to ask is really, do you think the Chinese government will let a weak reopen happen, right? After 3 months, the reopen is done. The average Chinese consumer is sitting on approximately 4 trillion of excess savings in renminbi, right? If you look at their growth this year, the GDP is driven mainly by internal consumption and internal services. It's not really an export-led economy anymore. So the data points that we're seeing is very important, right? If we look at the underlying data points, in the first 3 months, total social financing has been one of the strongest flows that we've ever seen, meaning that people are borrowing and they're financing and that there's credit being given, right? And then also, if you look at congestion data, it's pretty much at pre-2019 levels. Domestic flight consumption, everything is back in China. And I think that's very important because while there may be a recession in the US, Europe is looking better year over year. And the big 800-pound gorilla in the room, the biggest commodity consumer in the world, is back. And reopens, I think they're measured in years, not in months.
So let's talk about opportunities. What is the opportunity for investors right now?
Yeah, no, I think stick to the fundamentals, right? It's the supply and demand that will dictate pricing at the end of the day. We find oil very attractive, energy in general very attractive. Things like the metals and mining, copper, aluminum, where there's a very strong cyclical and secular. Cyclical meaning we just don't have enough of it, right? The mines haven't been producing, we haven't gone out and explored enough, demand has cyclically bounced back. But secular is where it's most important, right? Where the long-term trend of decarbonization, I mean, just think about it this way. One wind turbine, and one 3-megawatt wind turbine takes about 5 million tons of copper.
Wow.
5 tons of copper, right?
Yeah.
That's 8,000 to 10,000 pounds per wind turbine. An average EV versus an ICE engine is 3 to 4 times the copper intensity. The average age of the grid, the transformers in the US grid, is 25 years old, 25 to 30. So when we think about decarbonization, it is a physical transition that will require a lot of material. So seek for opportunities like that. And pricing will reflect oftentimes noise, dislocations. And then as active managers, that's what we try to do. Seek out these dislocations and look for the values.
And see where the most opportunities are.
Exactly, right.
Exactly.
Mm-hmm.
Al, thank you so much for joining me today. Again, we have been joined by Al Chu from BNY Mellon. For more information, visit www.ubs.com/views. Make sure to follow UBS on social media and check out our past trending episodes on demand. And as always, if you have any questions about your portfolio, please speak with a financial advisor. Until next time, I'm your guest host, Siobhan Chapman, filling in for Anthony Pastore. Have a great rest of your day, and remember to keep your eyes on what's trending.